Hello, and thank you for joining us at xm.com for this Forex Preview video. I'm Cristina Marujos, and joining me today is Marios Hadjikyriacos, investment analyst. Marios, this week, of course, is all about the U.S. presidential election, which is likely to overshadow everything. However, we do have an important central bank meeting coming up and economic data. Let's start, of course, with the Fed meeting on Thursday. Investors are not expecting the announcement of new policy. The latest economic indicators in the U.S. allow the Fed to maybe leave it to the next meeting in December. Could the Fed meeting spark any significant moves in the markets, or will they still be dictated by the election outcome?
Hello, Christina. Well, the election is the name of the game this week, so everything revolves around the election outcome. But having said that, the Fed meeting is always an important event. The real question is, will they do anything at this meeting? Most probably not. The US economy is still doing fine relatively according to economic data. The housing market is booming. The latest PMIs are solid. Seekers of unemployment benefits have declined in recent weeks. But having said that, two of the biggest risks that the Fed flagged at its latest meeting have materialized. COVID infections have spiked again, and we haven't gotten a new fiscal stimulus package. So both of these threaten to throw the recovery off course. Now, will the Fed, let's say, telegraph a policy move in December? There's less urgency to do so compared to Europe. That's my own view. The Fed can afford to wait until December before sending any of these signals and taking any concrete decisions. At that point, we will have a better sense of how much damage this latest wave of infections has inflicted on the economy and how much fiscal stimulus we might get. So they will most probably wait, and I'm in the camp that says they are not likely to send any concrete signals right now either. There's no urgency to do so. In terms of the markets, if indeed we see the Fed not signaling anything new, that would argue for a small spike higher in the dollar. However, everyone already expects the Fed not to signal anything new, so any upside reaction in the dollar might be relatively modest. On the other hand, if they surprise everyone and signal that more stimulus is coming in December, that would be a surprise first of all, and therefore that would argue for a much bigger negative spike in the dollar. So asymmetric risks surrounding the dollar from this meeting.
Now let's turn to the data front. Non-farm payrolls for October will be released on Friday, and despite the optimistic forecast, it's unlikely the report will move the dollar in a substantial way. What should investors look out for?
Well, you're right. Non-farm payrolls no longer are the market event they used to be in recent months. This whole year, really, we see an initial reaction, let's say a spike in the dollar, but that's usually very minor and it fades within a few minutes. So there's some volatility on non-farm payrolls, but there isn't a lasting trend for the markets, even in cases that we've gotten substantial surprises in the numbers. Now, what's really important? It's all about the election. Even if we do see some reactions on the Fed or on non-farm payrolls, those might be just, let's say, noise in the broader election trend. Beyond the election, the other real variable that will drive currencies and the dollar specifically is how relative virus trends between Europe and America evolve. So far, Europe has been hit very hard, new lockdowns coming in, that raises the risk of another negative GDP print in Q4, and therefore we've seen euro-dollar move a little lower. Now, whether this downfall continues will depend first of all on the election, and secondly how the US infections evolve from here.
Marios, thank you for joining me today, and thank you for watching this Forex Preview on the Federal Reserve meeting and non-farm payrolls here at xm.com.